What's up, everybody? This is Uncle, the Korean bro. Today is 2022, August 19, Friday night. Um, okay, let's look at articles. Okay, so what do we have tonight? Apple warns of security. Apple stock could be on the verge of another 30% rally. Another 30% rally. And two Russian villages evacuated after fire munitions depot. Okay. U.S. future sleep threatened to send markets negative for a week. Okay. Hmm. Okay. Apple warns a security flaw for iPhones, iPad, and Macs. Okay. Global markets lower after Wall Street gains on jobs data. Near-term headwinds present an opportunity in lost stores. Okay. If you hate speed cameras and you will like Vera mobility stock. If you're ignoring this service, you could be coaching your business money. Okay, let's see what that is. Apple stock could be on the verge of another 30% rally. Is Sanofi buy despite recent stumbles? Starbucks stock is brand loyalty enough reason to buy? Hmm. Why is which semiconductor stocks are ready for big price moves? It's one that we look uh last night. Hmm. Okay, this is enough of a market beat. Okay, let's read it. While it's been a good summer for equities in general, after a toward first half of the year, tech titan Apple is having a particularly sunny couple of months. Uh, since the start of June, their shares have rallied more than 30%, effectively reversing the 30% drop they'd been experiencing since March. What had initially looked like a bull trap soon became a full-on trend reversal, and as markets trend through these dog days of summer, Apple shares are sunny within a couple of dollars of hitting all-time highs. Those in the bear camp might be licking their chops at the thought of Apple soon starting to hit resistance and forming a dangerous technical triple top around the $180 level, as this could be the harbinger of a fresh bout of selling. But there are plenty of louder voices saying this might just be the first half of what will turn into a multi-month rally. Hmm. Two Russian villages evacuated after fire at munitions depot. A fire at a munitions depot near the Russian village of Timonovo has led to the evacuation of two villages in Russia's uh, Belgorod region on Ukraine's northeastern border, an official said Friday. The blaze was the latest in a series of destructive incidents on Russian occupied territory in Ukraine or inside Russia itself. Roughly 1,100 people reside in the villages of Timonovo and Zalty, around 15 miles from the Ukraine border. There were no casualties in Blaze late Thursday. Belgorod Regional Governor Vyacheslav Gladovok said, hmm, uh, next, U.S. future slate threatened to send markets negative for a week. Wall Street is poised to open significantly lower Friday, threatening to drag major indices back into negative territory for the week, with earnings season winding down. Futures for the benchmark S&P 500 slid 0.8%, and futures for the Dow Jones Industrials fell 0.6% hours before the opening bell. Gains on Thursday positioned the S&P, Dow, Nasdaq, Russell 2000 to finish positive for the week. After a mixed bag of corporate earnings, more solid jobs data, and a steady retail sales report, investors may already be looking ahead to the Federal Reserve's annual Jackson Hole conference in Wyoming next week for indications of when and how much The U.S. Central Bank might raise its main borrowing rate. Minutes of the Fed July meeting released this week said inflation still is too high and made clear the central bank will keep raising interest rates. The Fed has raised interest rates twice this year by 0.75 percentage points, triple its usual margin. Hmm. Let's go to the next one. Okay. Apple warns a security flaw for iPhones, iPads, and Macs. Apple disclosed a serious security vulnerabilities for iPhones, iPads, and Macs. They could potentially allow attackers to take complete control of these devices. Apple released two security reports about the issue on Wednesday, although they didn't receive wide attention outside of tech publications. Apple's explanation of the vulnerability means the hacker could get full admission access to the device. That would allow intruders to impersonate the device's owner and subsequently run any software in their name, said Rachel Beck, CEO of Social Proof Security. Security experts have advised users to update affected devices, the iPhone 6s and later models, several models of the iPad, including the fifth generation and later, all iPad Pro models and iPad Air 2, and Mac computers running macOS Monterey. The flaw also affects some iPod models. Apple did not say in the reports how, where, or by whom the vulnerabilities were discovered. In all cases, it cited anonymous research. Commercial spyware companies such as Israel and as a group are known for identifying and taking advantage of such flaws, exploiting them in the malware that surreptitiously infect target smartphones, siphons their content, and serve those targets in real time. NSO Group has been blacklisted by the U.S. Commerce Department. Its spyware is known to have been used in Europe, the Middle East, Africa, and Latin American journalists, dissidents, and human rights activists. So the point is, Apple, the products of Apple is non uh, security flaw has been found inside the products made by Apple, and people gotta be aware of it because there's a company named what was it, NSO Group. Probably this company has got to do with a malware program, and this malware is used as an tool to impersonate customer's device. Hmm. So people should be aware, especially people who use iPhones or products made by Apple. Uh, its price uh, could hmm, I think its price can go down anytime soon because of this news. I guess near-term headwinds present an opportunity in those stores. If we're looking for a bargain in the retail sector, road stores, uh, road store is not it, but it is a relatively safe dividend payer. It also buys back shares. The stock trades at roughly 21.5 times its earnings estimate, which put it in line with peers like the TJX companies in sector favorite like Walmart and Target. The valuation high related to the broad market S&P 500 is deserved, however, because Rose Store is well run, blue chip quality dividend growing off price retailer in good position for the times. There are near-term headwinds impacting results and the outlook, but those will aid the company over the long term. Uh, Inventories are bloating across the retail universe, and that means bargains galore for growth stores as inflation-afflicted clientele. We're disappointed with our sales results, which were impacted by the mounting inflationary pressures our customers faced, as well as an increasingly promotional retail environment. Earnings came in above our guidance range primarily due to lower incentive costs resulting from a below plan top line performance, said Barbara retailer Chief Executive Officer. Road Source confirms resistance on weak results. Okay. So near-term headwinds present an opportunity in Roche stores. Roche, uh, like Walmart, they got good potential. So it's blue chip quality dividend growing off price retailer in good position. Mm. If you hate speed cameras and you will like Vera Mobility stock, VRRM. Hmm. Okay, if you've ever gotten a speed red light or school bus camera ticket in the mail, then you know how miserable they can be. Hmm. At some point, you think to yourself that there's gotta be someone on the other side making a ton of money off these tickets. Well, there's a company making a ton of money, and they have a near monopoly in doing so. Vera Mobility, a smart mobility technology solutions company with a presence in over 15 countries. In addition to safety cameras, they also provide automated toll and violations management and title and registration services to rental dealerships. The company continued to generate positive cash flow during the COVID-19 pandemic as major car rental company Hertz Global went into bankruptcy. Hmm. The lockdown spurred pent-up demand for commuters to hit the roads hard and heavy when they were lifted. Despite rising fuel prices, the domestic travel recovery continues to drive profits for Vera as more travel means more tolls and more tickets. Vera also owns a 90% market share of nationwide tolling, title, and registration solutions for rental car companies and traffic violations management for commercial fleets. Misery is lowest profits. Rover's top bottom line growth, more growth ahead. Strategy review speculation. Well, let's take a look at Vera Mobility in detail and look at its real value. Okay. In this article, we're going to estimate the intrinsic value of Vera Mobility Corporation by taking expected future cash flows and discounting them to today's value. We will take advantage of the discounted cash flow model for this purpose. It may sound complicated, but actually it is quite simple. Remember though that there are many ways to estimate a company's value, and DCF is just one method. Mm. Uh, for those who are keen learners of equity analysis, this okay step by step through the calculation. So let's look at the value of strategy review speculation. More growth ahead. Avera Mobility operates in three segments. The commercial service segment offers automated toll and violation management, in addition to title and registration solutions for rental companies and fleets. Government solutions provide the automated safety solutions to government and school districts with over 9,000 speed, red light, city, and school bus cameras. Parking solutions provide software and hardware solutions to municipalities, university, transportation hubs, and healthcare facilities. Hmm. A very mobility stock. Okay, it's an interesting one. It's interesting. Indeed, it's indeed interesting. Hmm. I hate to receive a speed ticket, and I'm not sure if this also exists in Korea, but here it says it's pretty much dominating the market. Hmm. Here in this article, it says it's present in 15 countries. Hmm. I'm not sure if Korea is included in that 15 countries. Hmm. Okay, let's go over to Yahoo Finance and oh wait, there is one last article. Starbucks. Okay, I have a background in marketing, so it's impossible for me to ignore the loyalty that Starbucks receives from its customers. It shows up in my social media feed for sure, but I also noticed that even in the smallish area I live in, Starbucks continues to expand or at least refurbish its 35,000 store US footprint. But is that a good enough reason to buy this dog? That's the question I'll be exploring in this article. Um, I've had Starbucks on my watch list for some time, and I still don't have a good read. The stock is up 8% since the middle of July. However, S Bucks stock is down 24% in 2022. And with a price to earnings ratio of just under 25, Starbucks is still trading at a premium valuation. That's the bad news, but the potential for good news exists as well. Specifically, the company is expected to grow revenue at a high single digit rate in the next 5 years. And the outlook for earnings is slightly better. Companies projecting earnings growth of just over 10% in the next 5 years. If that's true, it would buck the existing trend of higher year over year revenue but declining year over year earnings. But how much of that growth will come from the United States? That's where one significant questions emerge. How much of that growth will come from the United States? How much of that growth will come? Hmm. Starbucks they may have a China problem. Okay, they may have a China problem. Who's steering the ship? Stock a buy. Okay, let's look at the bottom. Okay, the Starbucks stocks a buy. The analysts tracked by MarketBee give Starbucks a consensus price target, which gave the stock 16.9% upside. The puts it in the moderate buy category. And since my colleague Thomas Hughes wrote about Starbucks stock in early August, the stock has managed to push past resistance at its 150-day moving average. Hmm. Anyway, in my case, I'm not going to buy Starbucks stock because it's none of my interest. Plus, I think its price is way too high compared to its intrinsic value. Its intrinsic value. Um, so I just pass and look for a new one. So, what articles do you have on Yahoo Finance? Hmm. Bad Bath and Beyond stock is crashing after Ryan Cohen exit. Okay, survey finds 50% of companies want to cut head count. Stocks open lower, Bitcoin tumbles. Steinway drops more than 50% on bankruptcy report. Hmm. Analysts say these two stocks are the top picks for the rest of 2022. Three reasons to buy Walmart stock, Goldman. T ranks perfect handlers. These two stocks are sending a bullish signal. There is always a bull market somewhere. Jim Cramer's famous words suggest you can make money no matter what. You're too powerful. Buffett bought their stock, but we're not backing out. Watch out. The IRS is trying to close this RMD Luffy. How to reach avoid paying taxes in savings accounts. Here's where the landing bull and bear are saying comes next to the market stall. Which countries own the most gold? U.S. stocks open lower as traders brace for volatility amid monthly options expiration. Cheap stocks tanked as pandemic demand for electronics lumps, but there are still some winners. If you have this much money in your savings, then you probably own taxes. Teladoc Health stock gets another downgrade, this time on analyst says sell. Do you keep too much money in your savings account? How to tell? Cyber or softer stock sees relative strength rating climb to 77. Hmm. Okay. The one last article that I'm going to read is about the university student who just earned $110 million from a Bad Bath and Beyond stock dump. Okay, exactly. Hey, let's read this in detail. I already read it in Korean version, but I want to see like how it's been written in English, and because we got different views, right? Mm. In terms of looking at the same event, right? Around 2 p.m. ET in the afternoon on Tuesday, the share price of Bed Bath Beyond dropped from more than $26 share to below $20 in a matter of minutes. The stock, which has soared 440% over the past month as part of Reddit, fueled was floundered for an hour or two before jumping back up to the $27 range. An applied mathematics and economics major at the University of Southern California, Freeman bought more than 5 million shares of Bed Bath Beyond in July. He made the buy shortly after the company ousted its CEO Mark Tritton following a dismal first quarter financial report in late June, showing that sales plunged 25%, revenues fell to $1 billion, and the company was drowning in $3 billion in debt with only $107 million cash on its balance sheet. Freeman's buying came months after Ryan Cohen, the founder of online packaged goods retailer Chewy, the chairman of GameStop, bought a 10% stake in Bed Bath and Beyond in March. Cohen is a much loved figure on Reddit, investing forms after he bought a 10% stake in GameStop and joined the company's board in January 2021, in part triggering the infamous meme stock rally. Hmm. This is just a guy. This is an average university student. Hmm. Lucky bastard. Okay, let's read about Cadence, the company. The software designer finds itself in right place at right time. Cadence Design. Okay, you could say that Cadence Design Systems in the right place at the right time. If the performance of CDN stock is any indication, the software designer finds itself in some of the hottest markets in information technology, data analytics, artificial intelligence, and machine learning software, to name a few. Moreover, its customers also use Cadence technology needed for a long-term trend of digital transformation, which accelerated rapidly during the COVID-19 shutdown. Generational industry drivers and rapidly unfolding digital transformation across several industries present an enormous opportunity for Cadence. I strongly believe we couldn't be better positioned to seize this opportunity, Cadence chief executive said during the company's recent second quarter earnings call with analysts. Information technology spending in trillions with growth versus prior, helping customers gain a competitive edge. Customers use Cadence's electronic design software to speed up development and testing of electronic systems. It provides software, hardware, intellectual property that turns design concepts into reality. As customers deliver entire devices such as smartphones, laptop computers, and gaming systems, the least also indicate automobiles and autonomous driving systems. Their clients also make servers, cloud data centers, aerospace products, and semiconductors. Cadence technology helps customers gain a competitive edge in their development of integrated circuits, systems on cheap, and increasingly sophisticated electronic devices and systems. They also help to optimize performance, minimize power consumption, and reduce design, development, and manufacturing costs. Among its customers, Cadence entered into a multi-year partnership with McLaren Formula One team in May. Okay. Okay, I get it. Cadence. Let's look at Cadence. Hmm. 5 high flying USB, which we saw the upside left too. Wow. Hmm. Nasdaq Composite Axis Bear Market. Hmm. Here's why investors need to keep an eye on Caddis. Let's read this. Hmm. This is about Cadence, okay. Record inflation, tough Fed policy, lingering supply chain issues, and uncertainty prevailing over global macroeconomic conditions have raised investors' apprehension. Amid the ongoing volatility, Cadence Design Systems is a stock investors may consider adding to their portfolio to make some gains from its upside potential. The company currently has a Zacks rank number one. You can see the complete list of today's Zack number one ranked stores here. Why is the CDNS an attractive pick? Apart from it having solid fundamentals, Cadence has the favorable combination of a growth score of A and Zacks ranked number one. Strong fundamental drivers. Based in San Jose, CA Cadence offers products and tools that help customers design electronic products. Cadence's core electronic design automation software and services enable engineers to develop different types of ICs. Its design IPs are directly integrated into the ICs. Cadence's performance is being driven by strength across all segments, owing to a healthy demand for the company's diversified product portfolio. Deployment of 5G, increasing usage of hyperscale computing, and emerging technologies like artificial intelligence and machine learning are fueling digital transformation across various end markets and boosting demand for advanced semiconductor chips. Frequent product launches are expected to help the company sustain top line growth in 2021. Cadence introduced 13 new products, including Cadence Helium Virtual and Hybrid Studio and Allegro X. The Compass Palladium and Protium platform is gaining traction among clients in the hyperscale AI, ML, and server customers. Okay, so they make a lot of new products. They launch new products, and mm, uh, in terms of designing software, a lot of company use Cadence. Mm. Yeah, here it says ICs or something like that. Okay, Cadence. Its price is too high, but what I noticed was that its revenue is increasing year over year, which is something that I look into. Okay, next one. A survey finds 50% of companies want to cut headcount more in brief. Okay, the new U.S. economy has created more than 3 million jobs this year. The number of people working as of July exceeded the total seen in February 2020, just before the pandemic tipped the economy into recession. And following this hiring binge, companies are now planning to cut back. So way before, way before company, wait, this year they, what is it? Created more than 3 million jobs. They created, they created more than 3 million jobs, but at the same time, they're now planning to cut back. Okay, a new survey from a consultancy PwC released this month showed 50% of companies are planning to reduce overall headcount. Additionally, 46% of companies said they are dropping or reducing signing bonuses, while 44% are rescinding offers. Hmm. Soundword drops more than 50% on bankruptcy report. What is Soundword? Soundword Group, the parent company of Regal Cinemas, is preparing to file for bankruptcy after struggling to climb back from a pandemic lows. According to the Wall Street Journal, it's got a It sounds like an entertainment company, like the one that produces movies, stuff. His share plunged on the news, down more than 50% in early morning trading. The report added that the company, which acts as the world's second largest cinema chain, wow, has engaged lawyers from Kirkland and Alice LLP and consultants from Alex Partners to advise on the bankruptcy process. So they are, they're like on the verge of bankruptcy. Can't get it. Hmm. And analysts say these two stocks are their top picks for the rest of 2022. Zeta Global Holdings, online marketing company. Zeta Global Holdings. Therapeutics. Forma Therapeutics. Stock despite came to an trend according to Goldman. The outlook for Walmart's crucial back to school and holiday shopping season still remains far from certain as most shoppers buy canned tuna and chicken and even beans instead of daily meats and eye popping inflation. It's what I read last night. So, 97% of executives say we're in a recession or headed toward one. Wow. So people still think that it's this recession is not over, and it's either going to start soon or uh, what a lot of executives say here. There's more to come. There are more to come. Obviously, uh, recession is not over. It's what they say, right? The overwhelming majority of corporate executives are bracing for a recession, according to a new survey. Hmm. Nearly all 70 business leaders surveyed by Stifel Financial believe the U.S. economy is either already in a recession or will face one within the next 18 months. Only 3% think one will be avoided entirely. We've been hearing it consistently, said Michael Collender, head of consumer retail and diversified industrials investment banking at Stifel. They believe that we're either in a recession or heading to one very shortly. Collender told Yahoo Finance Live. The study also found inflation and the tight labor market represent the two biggest perceived threats to running a business today. So inflation and tight labor market. Inflation and tight labor market. CEOs are struggling to find significant enough levels of labor at attractive enough pricing. Hmm. The survey found 53% of respondents believe that inflation will be an issue for the next 2 quarters or year, with another 43% expecting high prices to continue for even longer. So inflation is not over. 40%, about 40% expect that way. The survey focused specifically on corporate executives, business owners, and private equity investors in the consumer retail and diversified industrial sectors. The first thought we'll look at Hmm. Let's look for interesting articles. Always a bull market somewhere. Jim Cramer's famous words suggest you can make money no matter what. Here are two powerful tailwinds to take advantage of today. There's always a bull market somewhere. Jim Cramer's famous words suggest you can make money no matter what. Here are two powerful tailwinds to take advantage of today. Okay. Today we're inundated with news of inflation and fears of recession. While these are real issues that will take many companies down, there's more to the story. As Mad Money host Gene Kramer famously says, there's always a bull market somewhere. Even if you decide to stay away from certain stocks, you can find opportunities in others. Here are two bull market industries and stocks that are seeing strong growth tailwinds. The natural gas industry is firing on all cylinders. You could be the landlord of Walmart, Whole Foods, and Kroger. Mitt Romney says a billionaire tax will trigger demand for these two physical assets. Get in now before the super rich swarm. Natural gas is currently trading around $9, more than 140% higher than last year. This is easily explained as there are strong demand and supply forces at work. On the demand side, this growing LNG industry has opened up North America's natural gas sector to strong global demand. According to the Energy Information Association, LNG exports are up almost 20% this year. On the supply side, North American natural gas is the cleanest, cheapest, most abundant, and most reliable. However, North American infrastructure constraints have put pressure on supply, driving up prices. So it's an energy company. Hmm, CGI. Hmm. Next one. Not a single interesting article is seen yet. Okay. Okay, one last article and then I'm done tonight. Okay, Teladoc Health. The reason I'm reading this is because I invested money into it. It's really short, but I'll read it anyway. Teladoc Health stock was at the receiving end of another downgrade on Wednesday. Government analyst Andy Dropper flipped his rating on the remote healthcare provider to sell from neutral. His pessimism relies on three things: a delay in enterprises deciding to sign up because of weakening macroeconomic environment, consumers slowing their spending in an inflationary environment, and headwinds from a strong dollar. But I think he's looking at it in the short term. In the long term, if he had looked at it in long term, he should he he would not have changed his position. He says he's selling, right? But if you know its potential, then you cannot just sell. It's future of hmm, medical, you know, industry, right? So hospital industry. So anyway, this is it for today. Uh, I'm running out of energy definitely. But I'll charge energy and then I'll get back to YouTube Live tomorrow. Okay. Okay. See you guys. Bye bye.